Hey folks, welcome back to Honey Money SG. You know the stock market and the crypto market has already crashed. So what's next for us? 2022 has been such a disastrous year for a lot of us. I mean, we have been losing money since the start of the year because of unrealized losses in our stock portfolio as well as crypto, despite us dollar cost averaging in every week or every month. And in this video, I just share a little on why everything is happening like that to give you a better understanding. You know, all this actually started because 2021 was such an inflated year and everybody have really wild targets for their price predictions on companies that do not actually earn profits yet. Everyone was talking about stocks that will go to the moon even if the companies have negative cash flow just because they have a growth story to be told. And lo and behold, Elon Musk actually said that there will be a market crash in 2022. Latest 2023, and it happened. It started with inflation from the supply chain disruption because we had a war with the Russian and Ukraine, and we also have supply chain disruption from China's supply chains because they have a lockdown with the COVID issue. Also, we see a sharp rise in the post-pandemic demand where people are really traveling to places where they have never been because they have been sheltered in place for 2 years now, and all the revenge spending, whether it's on travel, on retail, is going to hit inflation. And let's take a look at some of the core indicators of inflation, right? We do have food, we do have energy, which includes your oil prices, and we do have shelter, whether it's your own home or you're renting for it. And with the Russian-Ukraine war disrupting oil and food supplies, your transportation cost is going to go up. And transportation costs going up, it will affect every industry along the supply chain because manufactured goods needs to be transported, and if transportation costs are inflated due to the demand and supply, then they have to pass these costs to the consumers, which is affecting everybody's life, be it you or me. The Russian and Ukraine war didn't help either. In fact, Ukraine is one of the largest wheat exporters, and with no supply of wheat going out of the country, it's going to affect every other price in the market. In Singapore, the recent April core inflation rose to 3.3%, which is the fastest within the last 10 years. And in US, it's even more scary, right? 8.6%, which was just released a few weeks ago. With all this inflation that happened, the Fed needs to take action. US Federal Reserve Jerome Powell actually had multiple rate hikes, and he announced a 25 basis points rate hike since March. But that was not the end, right? 0.25%, they saw it's not really enough to curb inflation. So in May, they issued another 0.5% or 50 basis points rate hike. And that's also not enough either. Prices continued to spiral despite the Fed efforts to increase the rate hikes. So in most recent news last week, the Fed had to raise a further 75 basis points or 0.75% interest rate hike, and this will be the most recent attempt to curb inflation. Quick pause, if you haven't heard of Webull yet, it's the latest security brokerage in town and it's offering really low commission fees. In fact, zero commission fees, zero platform fees that you can use to trade your US and Hong Kong stocks. Webull offers a very attractive feature, and that is trading fractional shares, which means your dollar cost average becomes more effective because this time you don't have to fork out really large amount to buy your favorite stocks. So if you are interested in trading options, I think Webull is one of the best platforms because they offer zero commission fees for trading options as well. Also, Webull has heard your feedback since my previous video talking about the FX spread. So they now offer a very competitive rate of 0.3% FX spread, which is level to the market. And finally, if you really want a good reason for you to use Webull, it's because if you use my referral link down below to sign up and deposit at least $2,000 in your Webull account and making 6 buy-in trades, then you can stand to get up to $100 worth of Apple shares from now till 30th June. With that, let's get back to the video. And then you will be asking, what has rising interest rate got to do with the company's stock price? It's actually a really negative impact because you see companies actually need to borrow money to fund their purchases, fund their capital expenditures, and fund their business, right? The increase in interest rate will actually increase their borrowing costs. So now the interest expense that they have to pay back to the banks is much higher than before. And because of the rising interest expense, which is a cost to the company's bottom line, then the profit margin will suffer, which means the companies actually make less expected profit in the coming few quarters or even years. So for those who study financial modeling, your discounted cash flow model is actually impacted negatively because as interest rates rise, your expected future profit or gross margin is expected to fall. So your future prediction of the stock price is actually lower than what you would expect previously had the interest rates not increased so much. So that is why financial institutions or hedge funds are actually selling out their positions, therefore dampening further into the company's stock price. And you know, crypto has really been a disaster this year. When last year people said that crypto is a hedge to stocks investing or even a hedge against inflation, now it is just correlated to every of the market crash in the world. We started with a Luna Terra Death spiral in May, causing everyone invested in crypto to freak out and sell away their positions. Next, we have one of the largest crypto lending platforms, Celsius, halting withdrawals just a few weeks before, dampening the very little confidence that people have in crypto already, so further exacerbating deeper losses in crypto market. And then in last week, we saw further bad news for crypto being the Three Arrows Capital or 3AC facing insolvency issues. What's the next bad news for crypto? Nobody really know, but I did hear some rumors regarding BlockFi, so you can search for about it. Next up, let's talk about the great retrenchment or layoff exercise. I mean, we have been talking about great resignation these 2 years, right? Great resignation has been such a cool concept. People quitting their jobs because of their pandemic, and many people realize that companies are not giving them the benefit that they want, and they could do better when they are switching jobs or hopping over to a competitor. Now, all this may be coming to an end because ignoring the global market, let's talk about Singapore first. We did have 3 very large companies, Shopee, StashAway and Crypto.com, laying off their employees in the most recent weeks. Shopee by Sea Limited is laying off their employees from ShopeeFood and ShopeePay category. And just when you expect Shopee is expanding their business in the South America and Europe market, Shopee also exited the Spanish market, which is really bad news for the Shopee investors. And then Crypto.com, the company that spends so much money on advertising and marketing, even hiring Matt Damon, the American Hollywood actor, as their ambassador, even spending so much money to rename a stadium just to get their name, now have to lay off 260 employees or 5% of their entire workforce, which is actually a really large number, right? Imagine all the rice bowls of these 260 employees left with no jobs because of the crypto market. Let's talk about something closer, right? StashAway. Now, if you haven't heard of StashAway, it's actually a robo-advisor. There is a competitor to Syfe, to Endowers, to Money Owl. And you realize that I have done up videos on Syfe, Endowers and Money Owl, but never on StashAway. Maybe because I'm not aligned with their business and investment objective, but I'm glad I didn't talk about them much because now they are the first ones suffering from the retrenchment. In fact, they had to lay off 31 employees across 5 markets globally, which is a pretty big amount considering how small the company is. So what do all these companies that are laying off employees have in common if we connect the dots? These are companies which are largely unprofitable because of their high marketing and advertising expense, or maybe their employee costs are really high as well, such that their revenue is not enough to cover it and making it unprofitable, and hence they have low or negative cash flows even. And this company also tend to have really nice offices, right? Those that you can boast on TikTok videos showing the entire community how great your office is, but you realize that they are not really making good money and spending so much money on office expenses. And you know which company that reminds me of? Grab. I'm looking at you. So I think if you're working in one of these companies, do keep your head up and be careful because you may be the next one to be removed. So what is next after all this bad news surrounding the year of 2022? Will we be seeing a recession of our lifetime? Now, what recession actually means is 2 consecutive quarters of negative growth of GDP. So we may actually be in a recession, just that we don't know yet because it hasn't been reported. And what happens during a recession? I'm sure some of you would know that company will have to start reducing costs, removing some employees, especially trimming the high employee costs of the senior management and senior executives. And what happens after that? Every one of you can make a guess, is that people start to sell away their luxury products like properties and cars. Because these people are so used to the lavish lifestyle from their high income, right? I mean, if they have a high income, they can afford all this. But now without a job and their high income, they do need to sell away their liabilities like their investment property or their car, which are really high ticket items that they cannot afford the mortgage or the lending, borrowing anymore. And that is when you can actually start to see property prices falling in Singapore because there is increased supply and reduce demand. Of course, that is an ideal scenario, but of course, nobody wants a recession to happen. So I do hope every one of you here is prepared for the recession if it ever comes. But if it doesn't, it will be great, right? But if it comes, then I'm sure you can look at my inflation video where I talk about how you can actually manage inflation pressures and how you could better save money in this kind of difficult environment. With that, thank you for watching. My name is Christopher. This is Honey Money SG, steering young adults to financial independence.